The issue is this now. This is the market value, 10 million, 15 million naira. But what is that money, that 10 million naira worth today that you are going to get in 10 years? What is that 10 million worth today? Because remember that 1 naira today is more than 1 naira tomorrow.
Once again, it's good to be back in the studio. Good morning, everyone listening. And I have with me Idika Aja here, and we're looking to address. Is the word address, or we're looking to speak to how to invest in this month, September of 2025. You know, that's how that's the conversation we're having. And Idika is going to be helping us identify, you know, a lot of policies or whatever it is that exists right now and how to maneuver, do you understand, to make money. And without further, sorry, Idika, thank you for coming again to the studio.
Thank you.
It's good to always have you in the studio.
And the audience.
Definitely. I'm sure they are looking forward to hearing from you. And, you know, without further ado, right, it is being speculated that the Central Bank of Nigeria, right, may cut the NPR. What does this mean, really? And how should investors really adjust their portfolios in September of 2025 because of it?
Yeah, I'll give her. Thank you very much. Once again. Yes, though I don't want to really hinge on that they are going to cut or not going to cut.
Yeah.
Presently now, the NPR is at 27.5%. Now you are asking if they cut the rate,
they cut it
maybe to 25%. What will be the impact on investment?
And how do we bounce back from this month?
Yes.
Really, if that happens?
It has at least various impact cutting across various asset classes. The meaning of cutting of rate means what? One, that's the cost of borrowing will come down.
Yeah.
Because if you bring it down to 25%, banks who are lending definitely will bring down their rate. It follows like that. Then on the other hand, your investment in fixed income assets, like treasury bills, bonds, other assets, definitely will be affected. Because for now, let's example. I have a bond at a rate of let's say 20%.
Yeah. Sorry to cut you short. I was going to ask you that really. You know, how would it also affect government securities? Just like bonds that you're about to speak to and treasury bills.
I'm coming.
Yeah.
Now, if it is like bonds, we know we have federal government bonds. We have corporate bonds. Corporate bonds are bonds issued by corporate entities. Government bond are bonds issued by federal government. They are not the same thing.
No,
this one is more like what we call risk-free asset, that whatever happens, government must pay back. Now, and corporate bond has a risk. There's likelihood that the company might have problem and will not be able to pay. So this one is a risk asset. This one is non-risk asset. That's the difference between two of them. But the impact of cutting of rates applies to them, to two of them, the same way. Because you have issued bonds at a rate of 20%. Now interest has come down to, let's say, 15%. Now, if you want to issue another one, you issue at a lesser interest rate. Do you get it? Now, those ones you have issued, those who wants to buy at the secondary market will start looking for those ones that are issued at 20%.
Yes, 20%, yes.
You know, the new ones are issued at 15%. So that's just the difference. Then the price of that bond will not go up.
Okay. So what kind of assets classes, you know, can one prioritize this month if that is the case, the cut comes?
So if the cuts, definitely depending on your, like we keep on mentioning, like your investment goals, your age, your risk tolerance. But normally, people will start moving out of the fixed income assets because the yield will come down. If the rates, if the cut rate, the yield will come down.
Yeah.
Now people will start moving to stock. Because if you cut rate, like I said, the cost of borrowing will come down. The consumer goods sector, other companies, once they go to borrow, at least their interest expense will now come down. And that will now improve their bottom line, their earnings.
Okay.
So people, if you understand, you now say, okay, now rate is better. If maybe Dangote had to pay about 90 billion interest expense when the interest rate was at 27%, now interest rate has gone down to 25%. He is projecting, you will now project, okay, fine. That means he will be able to service his debt and equally borrow more and increase his bottom line. Yeah. Because some people think that to borrow is bad. No, it's not bad. But it is that when you borrow, it magnifies the return on equity.
Yeah, I agree with that.
Returns on equity. So people use debt to increase return.
Yeah.
But the things that you have to manage is so that you don't go bankrupt or it don't become a problem to you.
Yeah, you have to manage it. And like I just want to add to what you said, really. Borrowing is not bad, to be honest. You just have to have a purpose.
Yeah, sure.
Know how to execute, and at the end of the day, you get back what you
want. The ability to pay back.
Yeah,
that's
exactly.
That's very. Another thing that people think that it's not good to borrow because there is always a trade-off between solvency, that's bankruptcy if you borrow, and the tax issue. Because now, if you borrow now, before you can arrive at even the taxable amounts, you have to deduct the interest expense.
First.
Unlike when you are using your money.
Your own money, yes, of course.
You understand? You are using 100,000 to start a business. And if you are paying tax, so by the time you calculate, get everything, no interest expense, you go down to tax, they'll now deduct. The tax will increase. But if you are using, you borrowed 100,000 naira, to pay business. By the time you get to tax, you must have deducted the interest expense.
You have to.
That will now bring down the tax you are likely to pay. But you are not using your money. There's always that.
Yeah, you are not using your money. So
that money you should have used to put inside a business, you can now put it in another asset class and it will give you interest.
Exactly.
See the logic?
Yeah, I get you. It makes a lot of sense. So, if in fact, moving on from that, right? Outside of NPR considerations, really, right? What should investors, actually be looking to invest in bonds, stocks, property, or businesses right now?
Okay, that's a very, very wonderful question. But I will answer that question with a question too.
Yeah.
I would like you to answer this so that we can now get it. Now, the question you are asking goes back to what we call the real value. Yeah. You have the market value, you have the real value. Take, for example, you want to buy maybe a three-bedroom bungalow in Lekki. Yeah. And they're telling you, okay, the value of the property is maybe say 100 million. Yeah. That is the market value. Now, you have to decide what is the real worth of that property, which is what we call the real value, which is what we call the intrinsic value. Yeah. So that's the difference. You can see this one is market value, and this one is the real value. Now, going back to your question, you said, what should you look at? What you should look at is not the market noise, what the price is going, what they are telling you, even in stock, even in bonds. Okay, if I invest in fixed income, it will give me such amount of money. That is the market value. Their concern should be the real value. And that's what you should look at for. Now, let me put up this question. For instance, you are told that, okay, you have 5 million naira and you want to invest in federal government bonds, savings bond, which is normally 2 years. Yeah. And that 5 million naira, yes, expecting that it will give you 10 million naira in 5 years on one side. Now, another person has the same 5 million naira. And instead of buying federal government bond, he wants to buy corporate bonds. And that corporate bond will now give him, he's expected to realize 15 million naira. So which one will you choose?
Wait, come again. I want Kayode. Kayode.
I said you have 5 million naira and cash.
Yes.
Okay.
And you want to use that 5 million naira to buy federal government bonds. And the cash flow, it will give you 10 million naira, say in 5 years. If you invest that 5 million naira, it will give you 10 million naira in 5 years in federal government bond. Ogiva now has the same 5 million naira. And instead of buying federal government bonds, he wants to buy corporate bonds. And that corporate bond is promised that he will get 15 million naira
in 5 years.
In 5 years. This one, 5 million naira to get 10 million naira in 5 years. This one, 5 million naira to get 15 million naira in 5 years. I'm asking now, because that's the root of the question you are asking.
Yeah.
Which of them will you choose?
The 50 million naira in 5 years now.
Most likely I'll go for the 10 million because it's guaranteed. It's federal government.
Government bond.
That's a good question. That's a good angle.
No.
Now that is the thing. You know he's answered. Now that is the key. Now the issue is this. Now this is the market value, 10 million, 15 million naira. But what is that money, that 10 million naira worth today that you are going to get in 10 years? What is that 10 million worth today? Because remember that 1 naira today is more than 1 naira tomorrow.
Yes.
Do you get the point?
Yes.
Now that is where the intrinsic value comes in. So as an investor, always find out what is the worth of my investment today. The one I'm going to expect in 5 years time, in 1 year time, 3 years. What is that? What is the value? Not what the market is telling you. And that is where the intrinsic value comes in. And now he has mentioned a very key thing.
Because it's guaranteed.
Because it's guaranteed.
Yes.
That is where you now talk about what we call the discount factor. Now, if you are investing in government bond, because it is risk-free,
yes,
normally you have to discount with a lesser rate. Let's say 10%. If you use 10% to discount that 5 million naira in 5 years today, it will give you about 6.2 million. If it is corporate bond, you are likely to apply a higher discount rate to cover for what? For the risk. And time value of money. If you use let me say 15%, which is likely, it will give you lesser than that 6.3 million. So you can now see the value of those investments.
Completely different.
The one that is giving you 10 million in 5 years, the value today is higher than the one that is giving you 15 million naira in 5 years.
So Kayode
was out. Kayode was very, very intelligent.
Smart investor.
You're very, 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 very smart. So you
cannot be listening to Everyday Money Matters and not be smart. The reason you miss it is because you are the one always asking the question, so you don't listen.
Is it that my eyes are just red? Which one?
So you can now see. So what investors should watch out is the real value, not necessarily the market value, the stream, the noise. Okay, I have investment, it will give me what is the risk you are taking, and you have to discount it. It even applies to individuals. If you are working now, somebody 30-year-old person who is working expected to work for another 30 years, 65 years. You understand?
Yes.
And you are paying him 1 million naira. Then a 40-year person who is earning the same 1 million naira and expected to retire maybe around 65, the same age. You can't value them the same way. The person that is 30 years is more valuable.
It's more valuable. Yes.
He has more intrinsic value than the person that is 40 years. So, as an investor, my advice, an investor, always find out the true worth of whatever you are doing. And that will help you to determine if like we now said now, we've now used this bond, government bond and corporate bond. Then, as an investor, you don't look at the higher value in absolute term, which is 15 million naira. You go for the one that will give you 10 million naira. Because the present value of the future cash flow is higher.
Yes, it's higher than that one. So, I mean, you all can see it. Red eyes will never get you anywhere. You can see even in the elements inside the whole thing. I went for the wrong choice, but at least I hope you all have learnt how to apply yourself this December. So everything we've said here today, I believe, if you look at your investments and apply, the I won't say advice, but the maneuvers, really, I'll use that word, right? If you apply that, the strategy into executing from December, definitely the future will be bright. And it's been Everyday Money Matters. Thank you again, Idika, for being on the show. Thank you, guys.
Thank you very much. Yeah.
Catch up with us on our YouTube page, and we look forward to seeing you next week. Bye.